Google just reported its second quarter 2024 results, and the stock is down 1.4% in after-hours trading at the time of recording this video. But it is important to note that Google stock is up 32% year to date, so it does seem like some strong numbers were already priced into the stock. Now, every quarter, I go through Google's results and share all of the good and the bad that I find here on my channel. I have already gone through the earnings report and all of the highlights, and in today's video, I will share with you everything that I found. We will also be discussing what I think about Google's price today and what I am doing with my position now. I do my absolute best to go through the earnings and get these videos out as soon as possible. And if you appreciate that, then please remember to leave a like on the video, as it does really help out my channel. But with that being said, let's now hop into it. So as I said, I went through the earnings report already, and I took some screenshots of all of the highlights that I found. So right here from the CFO, they say, we delivered revenues of $85 billion, up 14% year over year, driven by search as well as cloud, which for the first time exceeded $10 billion in quarterly revenues and $1 billion in operating profit. So Google Search and Google Cloud are continuing to kill it, and Google did grow its revenue by 14% year over year. Now down here, we can also see this 14% revenue growth, and last year in the second quarter, Google only grew its revenue by 7%. So it seems like Google's overall revenue is starting to re-accelerate, and I do think that this is a great thing for the business. Additionally, here we can see that operating income came in at $27.4 billion on the quarter, and the operating margin was 32%. This is growth to operating income of 26% year over year, and a growth to the operating margin of 3%. So Google's business is continuing to become even more efficient, and the operating income did grow massively year over year. And I do think that as Google Cloud continues to grow strong and produce positive operating income now, Google's overall operating income should continue to grow over the long term. Now lastly, down here at the bottom, we can see that net income came in at $23.6 billion, which is up 29% year over year. So right away, this does seem like it was a very strong quarter for Google, with revenues up 14%, operating income up 26%, and net income up 29%. So now let's move on to my next screenshot right here, which is all of the different business segments from Google. And here we can see that Google search revenue is up 14% year over year. YouTube ads are up 13%. The Google network is actually down 5% though. And overall, Google ads is up 11% year over year. Then we can see that Google subscriptions are up 14% year over year. Google Cloud is up 29%, and the total revenue for the business is up 14% year over year. So overall, Google Cloud is still the fastest growing segment of Google's overall business, and it has officially had its first quarter of over $10 billion in revenue, which I think is a great thing to see. So now let's take a look at where the operating income for Google's business came from. And here we can see that the Google services overall had $29.7 billion in operating income, and Google Cloud had $1.172 billion. So Google Cloud's overall operating income is still only a small portion of Google's overall operating income, but I do believe that this will scale quite a bit over the long term. And I mean, year over year, Google Cloud's operating income did grow by roughly 300%, and it did triple. And this should continue to grow very strongly over time. But still, with that being said, Google Services operating income did still grow by 27% year over year. Now, the last thing that I want to say while we're on the screenshot is that Google Cloud's operating margin is roughly 11% right now, and AWS and Microsoft's Azure, or their cloud businesses, have operating margins around 40%. So in terms of Google's operating margin on its cloud division, I think that it is still quite low and could continue to expand over the long term and end up producing a significant amount of operating income for Google's business, both as the margins expand and as Google Cloud continues to grow very well over the long term. So now let's head over to Google's balance sheet. And here we can see that the company has $100.7 billion of cash and cash equivalents and $162 billion of current assets on the balance sheet. Google also has $78 billion of total current liabilities and $114 billion of total liabilities. Now, this is a very strong balance sheet, and I'll explain why. So if we take a look at the cash position of $100 billion, this means that Google could wipe out all of its current liabilities and still have roughly $22 billion of cash left over. In fact, it could almost wipe out all of its liabilities and become completely debt-free with its existing cash position if the company wanted to. Additionally, it does have that $162 billion of current assets, so if it wanted to, again, it could wipe out all of its liabilities and still have around $50 billion of current assets on the balance sheet. So Google's balance sheet is very strong and the company is cash rich and definitely not in any financial stress at all. Now, if we move over to the income statement, the one thing that I do want to point out here is the number of shares that Google has now. And in the most recent quarter, they are now sitting at 12.495 billion shares outstanding, which is a decline of about 2.2% year over year. Now, what this means is that Google has bought back 2.2% of its shares over the past year, and this is where the majority of the company's free cash flow is going right now, is simply buying back shares. Now, if we head over to the cash flow statement, which is my personal favorite financial statement right here, we can see that Google's operating cash flow in this quarter was $26.6 billion. Now, in the second quarter of 2023, they generated $28.7 billion of operating cash flow, which means that Google's operating cash flow actually declined by $2 billion year over year, which at face value, I think is actually a bearish point, but then I wanted to take a look at the numbers and see why this was. And here we can see that in the second quarter of 2023, Google had an income tax gain of $4.45 billion, whereas this year they had an income tax payment of $3.9 billion. Now, this is an $8.3 billion difference in Google's income taxes year over year for the second quarter. And if we normalize the income taxes, then Google would have done $24.2 billion in operating cash flow last year and $30.5 billion in operating cash flow this year for the second quarter. This would be a year-over-year growth to operating cash flow of 26% if we set both quarters to paying zero income tax or having zero income tax gains on the quarter. Now, the reason Google's income taxes are like this on the cash flow statement is because last year in 2023, Google was delaying its income tax payments to the fourth quarter. So basically, for the first 3 quarters of the year, Google had additional income tax gains towards operating cash flow. And then in the fourth quarter, they had a one-time massive tax payment of over $10 billion, and they were essentially just delaying it to the fourth quarter. Google is not doing that this year, and they're actually paying their income taxes, so it is kind of skewing the overall cash flow figures, at least over the past year, and especially in 2023. So the year-over-year comparison in terms of GAAP metrics isn't the best comparison right now. And again, if we simply just set the income taxes to zero for both quarters, then we get about a 26% year-over-year growth rate to operating cash flow. And this is the exact same story for the year-to-date results for 2023 versus 2024. Last year, they had an $8.5 billion gain to income taxes, and so far this year, they have an $890 million payment, which is skewing the overall numbers right here. But in general, Google has produced $55.5 billion of operating cash flow so far in 2024. Now, if we move on and take a look at the purchases of property, plant, and equipment, which is known as the capital expenditures on the balance sheet, we can see that they have basically doubled year over year to $13.2 billion in this quarter. Now, what this also means is that Google produced about $13.5 billion of free cash flow on this quarter versus about $22 billion in free cash flow for the second quarter of 2023. So Google's free cash flow has also declined significantly for the second quarter of 2024 versus the second quarter of 2023. And the reason for that, again, is the operating cash flow is lower and the capital expenditures essentially doubled. Now, Google did warn its investors that it is investing a lot more money into capital expenditures this year, and the company is investing a lot into its cloud and AI infrastructure. So this is not really a surprise for me as a shareholder and as someone who watches Google's business, but this is why I am preferring to use the operating cash flow metrics when I am valuing Google's business right now, because they are in a massive CapEx cycle, and this is significantly suppressing free cash flow in the short term. So right now, I do think that it does make more sense to value Google off of its operating cash flows before these large capital expenditures. Now, year to date, we can also see that Google has spent about $25.2 billion on CapEx. So far year to date, Google has only produced about $30 billion in free cash flow, which is a pretty significant drop year over year as well. Then we can see down here that Google has bought back about $15.7 billion of stock in the second quarter of 2024 and paid about $2.5 billion in dividend. Now, altogether, this is about $18 billion returned to shareholders. However, remember, the company only generated $13 billion in free cash flow on the quarter. This means that Google is buying back more shares and paying a dividend than the company actually does in free cash flow or actually generates in profits. Now, what this means is that Google is actually dipping into its cash position to buy back shares. And I don't think that this is really a bad thing because, as we saw, Google does have $100 billion of cash on its balance sheet, so it can afford to buy back shares right now and actually dip into that cash position to do so. I just think that it is important to note and point out that Google is actually buying back more shares than the company is generating in free cash flow. And the reason this is important is because it's basically unsustainable right now. And the company cannot do this forever. So that's just something to keep note of. And yeah, just know that Google is dipping into its cash position to actually buy back shares right now. So now let's head over to Stock Unlock and start talking about Google's valuation today. So today the company is trading for $2.25 trillion. And I did the math and Google has now produced $105 billion in trailing 12 months operating cash flow. Now what this means is that Google is currently trading for 21.4 times operating cash flow. This is the business's multiple today. Next, what I like to do is take a look at how the business has been valued on the stock market over the past decade. So we're taking a look at Google's price to operating cash flow here since 2014, and we can see that the company's 10-year historical average has been about 17.8. This means that Google is trading quite a bit above its historical average price to operating cash flow ratio, and it's actually trading about 20% above its historical averages. Now, additionally, the highest that Google has ever traded for was a price to operating cash flow of 23.8 in September of 2021. So Google is actually approaching its 10-year high price ratios today, and it is trading about 20% above its historical average price ratios as well. And this is leading me to the conclusion that Google is actually on the more expensive end in the market right now. And I do actually think that Google is looking a little bit overvalued, not massively overvalued, but in my opinion, it is not really an attractive stock in the market today. And for those reasons, I have not been adding to my Google position over the past about 6 months now. I was really buying a lot of Google here in December of 2022 and in January of 2023, and I was also making videos on my channel explaining why I thought that Google looked so freaking cheap down here, because it was trading for basically all-time low price ratios. However, over the past about 18 months now, Google's stock price has been running massively, and this has caused the price ratios to expand right back to near their decade highs. And for those reasons, I do not think that Google is actually a very cheap stock in the market today. And I do think that there are a lot better investments out there. And that also is why I have not been adding to my Google position. Now, the last thing that I want to do in this video is run some DCF calculations on Google to show what the market is currently pricing in. So I already did this ahead of time for the video. And what the market is currently pricing in is a 5-year annual growth rate to Google's operating cash flow of 12.5%. The company to continue buying back roughly 2.2% of its shares on an annual basis, 12.5% annual dividend growth, and a price to operating cash flow of 17, which we saw was in line with the company's 10-year historical averages. And if Google can hit all of these metrics over the next 5 years, then the stock can produce a compounded annual growth rate of roughly 10% over the next 5 years as well, which is the historical average of the S&P 500. So basically, for Google to match the historical returns of the S&P 500, it does have to continue growing operating cash flow at about 12.5% annually out to 2029. Now, if we scroll down, we can see that this does mean that Google would have to produce around $189 billion in operating cash flow by the year of 2029, which is a pretty significant growth to the company's $105 billion in operating cash flows today. It would actually have to grow by about 85%. So this is a lot of operating cash flow growth for Google over the next 5 years. And again, this is what is priced into the stock today. And I do actually think that this is on the more optimistic end, which also kind of suggests that the stock may be slightly, well, the stock is actually pricing in quite a bit of growth to Google's business currently in the market. So investors, in my opinion, are paying for a lot of Google's future growth today. And if we lower Google's operating cash flow annual growth rate to 10%, then we can see that the stock could produce a compounded annual growth rate of about 7.65%. So if Google only manages to grow its operating cash flows by an annual rate of 10% over the next 5 years, then its share price should only produce returns of about 7.6% annually as well. And this is what I mean. The stock is actually pricing in quite a bit of growth right now. And this is also why I am not adding to my position today, because I am not that optimistic that Google is going to blow us out of the water over the next 5 years and continue to compound its operating cash flows at that high of a rate. So for those reasons, I don't really believe that Google is selling for a wide margin of safety today. I would actually argue that it's slightly overvalued in the market right now. And I would be much more happy to add to my Google position when the stock does eventually correct, which I'm not sure when it will, but all stocks do correct eventually. So I will be watching Google to see when the stock does correct, and I will let my audience know, and I'll let YouTube know when I do eventually add more to my Google position when I think that the stock is looking attractive. But for me personally, I do believe that Google is a hold, and I am just going to hold on to my shares in my portfolio. In one of my previous videos, I was making a strong argument that I think that Amazon stock is actually looking more attractive than Google today, and I still do believe that. I think that Amazon is the cheapest Magnificent 7 stock in the market, and I do think that Amazon is actually looking arguably undervalued in the market. So I was considering selling some of my Google shares to buy more Amazon before earnings, but I never ended up doing it. I just decided that I want to hold on to my Google shares, and that's just what it is. So for now, Google is a hold for me. And I just want to hold on to this business for the long term because I do believe that it is a high quality business. And I do see how Google Cloud could start adding significant profits to Google's business. And I do think that this business will continue to grow very strongly over the long term. And I do think that Google has one of the best moats in the entire world. I think that it's just a very high quality business. And therefore, I am reluctant to sell my shares in my portfolio or really try and trade around the stock. But again, I don't necessarily think the stock is a buy today, but I don't really think that it is a sell either. So for me, it's a hold, and I'm just going to look to add to my position if the stock ever does see a correction again in the future. But with that being said, that is going to wrap up the video for today, everyone. So thank you so much for tuning in. I really do appreciate it. And again, if you did enjoy this video and you like my quick earnings updates like this, then please remember to leave a like on the video because it does help out my channel. But with all that being said, thank you all so much for watching. I truly do appreciate it, and I hope to see you all again in my next one.